Hey guys, it is Patrick, and before you dive into this lesson, I wanted you to know that you're about to start a new section of Principles of Accounting, and you can actually head to my website at www.patrickleemsa.com, where you can actually purchase and then download and then print the worksheets that go along with this lesson and all of the lessons that are connected to this section of Principles of Accounting. It's a great way to take notes so that you can actually concentrate on what I'm teaching you in our lessons, and then you can able to write notes along with the notes that I am showing on your screen. So all you have to do is head to my website at www.patrickleemsa.com. There you can purchase them and then download them, and then you can use them on this and all of the lessons that are connected to this section. So go ahead and do that. And if you are ready, let's head into our first lesson in this section right now. Hey guys, welcome to the second section in the financial accounting or principles of accounting course. In this section, we're going to be covering a couple of things. We're going to be covering heavily on the balance sheet, but we're also going to heavily talk about journal entries and debits and credits and kind of the actual language accountants use to document transactions through the accounting system. So we're going to start off with a review of the balance sheet, and then as we go forward, we're going to kind of shift gears a little bit and really talk about the mechanics of accounting. So that is going to be super important because everything else after this is predicated on you understanding what we're talking about when we talk about transactions, transaction analysis, and the language we as accountants speak. So make sure that you're in tune with the journal entries and the debits and credits and how we solve transactions, because if you can get that, the rest of the course becomes a little bit easier because you know how to talk the language. It's kind of like you know how to do 2 plus 2. You also know how to do 2 times 2. But what about if you had to do 2 plus 2 times 2? Well, if you don't know the mechanics of all of that, that's going to be a much harder problem than just 2 plus 2 or 2 times 2. And so that's what we're kind of helping you with in this section, is helping you learn the language from an accountant's standpoint. Now, in this lesson specifically, we're going to go over the balance sheet. A lot of this you already know, so it's kind of a review of what we talked about in section 1 in regards to the balance sheet, but that's what we're going to do in this lesson. So if you remember in the prior section, we talked about the basic accounting equation, and we said that the basic accounting equation is the basis for all of accounting and how accountants classify transactions into the actual books to the company. And so we said that the accounting equation is made up of assets, which equals our liabilities, and stockholders' equity or owner's capital. So that's the equation that the balance sheet is based on. And so we got to know this equation, and we know that the balance sheet must balance. Why should it balance? Well, if this equation is a hallmark of the balance sheet, then this equation would balance in normal circumstances, which means our balance sheet statement should also balance as well. Now, the balance sheet summarizes all of the assets, all of the liabilities, and stockholders' equity accounts. Now, you might start to get confused here. I might say stockholders' equity, owner's capital, owner's equity, they're all pretty much the same. So that's why we're using different words. We're trying to get you to be familiar that all of those mean kind of the same thing. So stockholders' equity account, typically after closing revenues, expenses, and dividends into the stockholders' equity account. So we haven't really talked about closing entries. That's another section that we're going to get into closing entries. But just so that you kind of have an understanding of what's going on, typically we take revenues, expenses, and dividends, and we close those accounts into what we would call retained earnings, which we talked about in the last section. Once we close those accounts to retained earnings, then all we're left with is assets, liabilities, and stockholders' equity. And so what this is saying here is that the balance sheet summarizes all of the assets, all of the liabilities, and all of the stockholders' equity. And typically it's done after we've closed out the revenues, expenses, and stock and dividends accounts into stockholders' equity. Why do we close it? Well, it's the same reason why at the end of a baseball game, we zero out the scoreboard so that when the next team comes in and they play, they start with a fresh, clean scoreboard, meaning that there's 0 points on the board. I mean, how crazy would it be that if you are, let's say, an Anaheim Angels fan, and the score was 6-2 at the end of that game, with the Angels being up, that they carried that 6 points to the next game. Well, that puts whatever team that comes in at a disadvantage if they don't also have 6 points. So if the next team comes in, let's say the Dodgers are going to play, the Los Angeles Dodgers are going to play the Anaheim Angels, and the Dodgers had 2 points at the last game, then they're coming in 6-2, and they'd have to catch up 4 points before they even get even with the Anaheim Angels. And so that doesn't make sense, right? So we zero out the scoreboard at the end of every game. And so these revenues, expenses, and dividends are kind of like scoreboards. We zero them out at the end of every fiscal year or calendar year, so that we can start fresh and new with those accounts. Now, we don't zero out we don't zero out assets, liabilities, and stockholders' equity. We only zero out revenues, dividends, and expenses. So that's beyond what you need to know here, but that's why the information is provided to you in that parentheses. Okay, so the basic accounting equation, we said assets equals liabilities, owner's equity. What does this equation mean? Well, we said in the last section that the assets tell us what the company owns or controls, depending on how you want to look at it. What does the company control? And then who actually owns them at the end of the day, whether it is their debt holders or whether it is their shareholders. So this is a great equation that tells us, or this is a great statement that tells us kind of, what the company has and how the company is financing those assets. Okay, so that's what we're trying to do here with the balance sheet. We're trying to list all of that out so that we as external users get an understanding of who owns what, right? So in accounting, all business activity affects the basic accounting equation. So as we start to look at transactions, everything that we do affects the accounting equation. The question is how then do we interpret that into what we would call accounting, okay? It's important to remember that the equation must always balance, and I can't say that enough. The balance sheet always balances at the end of the day. Now, I showed you this example here of Facebook in the last section, but here it is again. We've got the balance sheet. Up here at the top, we've got the who, the what. Typically, we also have the when, but we'll skip that here because of the way that this is presented on Facebook's annual reports. We also know that the numbers here are in millions. They are not in dollars. They're in millions of dollars. So when we see a 1, that doesn't mean $1. That means $1 million. And we also have here, we've got the assets. We have the liabilities. And then we have the stockholders' equity, right? So assets equals liabilities and stockholders' equity. We can also look at this balance sheet and see that the total assets for Facebook is $97 billion. We can also see that if we add up the total liabilities and stockholders' equity, we also have $97,334 million. Those two are the same, which means that this balance sheet balances. Remember, we always order these sections in the most liquid to least liquid. So cash is most liquid to cash, and therefore it goes first. That's why we see it first here. We see that as a $10 billion cash and cash equivalent. And then we go from there to marketable securities. Marketable securities are like cash, but we have to actually sell them first before we actually get the cash. So they're not necessarily cash, but they're very close to it. That's why they are right behind cash. Now, the heart of the balance sheet. So in order to prepare the balance sheet properly, we need to understand the basics of transactions in our book. So in order to understand how balance sheets are put together, we also need to know how transactions are completed so that we can properly document a transaction that occurs in our organization. So what are we saying here? So the rest of what we're going to be doing, and we'll come back to balance sheets at the end, but the rest that we're going to be looking at is how do we actually do transactions in the accounting cycle? What things are we needing to know to actually input a transaction into the books of the business? And that's what we're going to teach you over the next a lot of lessons here on video. So hope you enjoyed this lesson on the introduction to the balance sheet. A lot of this you probably kind of already knew from the last section. We're kind of rehashing it. But in the next few lessons, we'll show you what transactions are all about and how to kind of solve them. So hope you enjoyed this lesson, and we'll see you in the next video. Hey guys, it is Patrick. Don't forget to press the like button and share this video with someone who could get a lot of use from watching this lesson, like maybe a classmate or maybe a friend or maybe just a parent, just because you wanted to share this video because you're very excited about what you saw. Share it with someone. And if you want to help us grow and help us make sure that we put the very best in accounting topics out on YouTube, make sure you press the subscribe button and turn on that notification bell. That way you're alerted every time we post videos to this channel. Now, I do this with every one of my classes at the end of class. What did you learn from this lesson? Put that in the comment section below and I'll respond to you on what you got out of this video. So hope you enjoyed this video and we will see you in the next lesson.